Welcome to the Money Mike Market Reports. Today we're going to be going over the markets, learn how to make some money. All right, so I'm gonna. Oh no, never mind. We're gonna do this. I'm gonna go share the screen. Bang. All right. Check it. We're heading here. Wrong one. Better one. Boom. All right. So today we're gonna be looking at moreover what's in my portfolio, why we're in those, and where they're going. So Rio Tinto is not in my portfolio, and we can skip right off of that. Let's start with the markets today. Actually, let's start. So this is Sunday, the 27th of February in 2022, and we're going to be looking at some overall levels, what's happening, what's going on, and where it's going. So as you can see, the markets are actually breaking down, setting new lows. You can see, we zoom in here, I believe it actually closed above. Oh no, it closed right at. Interesting. All right. So again, what we're looking at here is the S&P. Let's throw it, not the 1 hour, get out of here. Let's throw it on the weekly. If you don't zoom out, you don't know what's going on. That's the truth of it. You really got to get a bigger picture here. All right, so a lot of people like to say they think we're going to melt up. But you guys, that looks pretty big. You could see something, I guess, more vertical, but I don't know how much more vertical you want to get on a... $118, call 120% move in the span of from March 20th to January 2022. So you're looking at just under 2 years, doubling your money. Again, I mean, let's take it like this. Let's just do this. People think it's going to go vertical. People think we're still going to blast off. You tell me. Is this line not vertical? Is this not vertical? Is this not doubling your money in that much time not good enough for you? I don't know. I think people are getting a little greedy here. And here's the part that I want to key in on. If we look here on the MACD, we compare that to the overall index and what started to happen. So we started to level out. No, not you. Not you. We started to level out right about here, right? So from that point on, we had a divergence in the a divergence in the MACD compared to the S&P. So the S&P went up while the MACD was going down. Now, if you look at that, the S&P actually ended up catching up. It's now falling down. Now, we can see here, it's interesting. It's bouncing on the 52 EMA on the week. It pierced through other support levels here, sitting right above. So, I mean, we could potentially see some bounce here out of this, break a channel, maybe get resisted up here. So maybe we got a target of 45 in the next week or two before a further downside. As you can see here, the MACD is turning negative. We're literally almost negative. And as you got down here on the DMI, the directional moving index, we have the overall bearish momentum. I mean, look what happened last time the bearish momentum spiked. That was COVID. Boom, killed it. All right, what's happening? But if you look at it, the MACD was doing all right up until COVID. This time, the MACD's not doing good. The MACD's doing worse and worse and worse. And now we're starting to see it. So we got down here, increased bearish momentum. And if we look at the red line, that's the overall momentum. Overall momentum is increasing into the bearish downtrend. So, and we're going to see this on the next two as well. I'm not liking it. I'm not liking it. I am out of it. All right, same thing here, but a little worse. Well, look at that. The NASDAQ is below the 52, looking fugly as moth. And if we come over here and throw on our resistance lines, bam, look at that. Look at that. Closed, opened actually almost right at it, closed at it, punched it, resistance. Again, we could maybe see some bounce here. Looks like we might be getting a little bit of trend change down here in the MACD, but again, look at this overall. Overall, the MACD has been going down since August of 2020. So it's been in a divergence for over a year now. Same thing going on here with the DMI. Got increased bearish momentum with increased overall momentum. I only see one direction for this to go. That's down. Again, on the Dow, look at this. Look at this. Now, this pattern right here is a very interesting pattern. I'm going to actually quick throw up Ethereum and explain why. So, Ethereum way back, we're gonna have to edit this a little bit. Way. Oh man, this is gonna be really ugly when I do this. Okay, we're gonna have to. Whoosh kaboosh. All right. Oi, 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 oi. All right. All right, look at this. This is right before it crashed, right? Right before it pierced and went down all the way to 1800. What did we see here? We saw effectively one of those rising triangles. I really want to focus in here. We saw a triangle like this where the tops kept getting higher, but they all kept coming down to the same line on the bottom. Then it threw in a head and shoulder. I'll draw that real quick. It's a pretty obvious one. I'm sure you guys already see it, but there we go. There's the head and shoulder. Boom, 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 boom. All right, so there's your head and shoulder on it. Basically, it forms that kind of widening, I don't know what you want to call it, wedge, a rising wedge going up, but it's like an upside down one. At least that's how I would describe it. Down. All right, so now I sold Ethereum right in that. When I started seeing that, I sold it, got out of it, and thankfully, wow, look at that. So, toot my own horn, toot, toot, toot. I sold the top the first time around, then it came back in. All right, let's bring it back to the Dow. We're gonna throw you back on the day. Now, obviously, the wider the or the larger the pattern is made, the more drastic it's going to be. So we were seeing that in the Ethereum on the hourly. See it? We got this on the daily over here on the Dow. We got the same pattern happening. It's below the moving averages. It is deep in the negative here. We got deep in the negative. And we got, again, rising bearish momentum. More bearish momentum on all the technicals. The pattern with increased volatility headed towards the downside below the moving averages. You want to see it on the weekly? We're going to show you on the weekly. Bam! Below it again. I mean, like, oh, I got to zoom. What the heck just happened there? Negative. Just reset. Whoa. What happened? What the hell happened? What the hell happened? What the fuck? Okay, we're just going to go to the other chart. I don't know what the heck just happened. I've never had that happen before. Interesting, you shall say. All right. Back here on the Dow. Okay, come on, man. You're gonna be difficult. You're gonna be difficult with me. No, I want on the daily. And blam! Look at that. Look at that. All right. So honestly, if we're looking at price targets here, it's already breaking the resistance. The next, I don't want to say it, but damn, that looks like we might be dropping 4,000 points here, boys. Something I've been looking at too is if you look at when bubbles start, I haven't been looking at it. When bubbles start and what happens when they retrace below where they originally started. So we have a price target here. But in all honesty, if this thing collapses, we might end up down here at 1,700. And that would be absolutely disgusting. Now, if you think about that in comparison to gold and the Dow Jones gold 1-to-1 ratio, gold would have to 10x. So gold would 10x, well, this baby would get cut in half. I could see it. It'd be one ugly scenario, but in the world that we're living in today, oh boy, could it happen. All right, so here's the Russell. Same thing. The same thing. It's just looking uglier and uglier. Look, all these are just showing ugliness. They just, and again on the weekly, we're looking again below the. Is that actually? It's bouncing off of the. Yeah, it's bouncing off. Yeah. So look, it got rejected. Got sent down. Plunge protection team bought it back up. Getting rejected again. It's just not looking pretty. And you can see how significant this line is here. Bounce, 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 bounce. Let's just go back. Bounce, 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 bounce. Broken down, bear market until double bottom, then bounce back through. Right here, I'm assuming got into oversold correction of the RSI up, but probably same thing. Look at this. Even during COVID, it broke down, wanted to come back up, kissed it, then went lower. Some resistance, boom, off to the races again. And now we're crossing it again. So again, I only see one direction. That's lower. If you look here on the MACD, it is kind of rounding out. But what's been happening here, the trend has been it's going to get rejected. So it'll meet maybe at about 0 and get rejected, sent lower. Same thing here. Momentum's increasing, both on the bearish and the overall. There's just no sign of turning around here. All right, now to the Ricky, the commodity index. I'm huge into commodities right now. I think commodities are going to be the way to go for the next decade, potentially. It's all about hyperinflation. It's all about inflation. It's all about the macro conditions with war. I mean, I think this Russia thing is just the beginning. This Ukraine is not the end. Ukraine is the beginning. It's going to go into China and Taiwan. You might see some of the other Baltic states like Latvia, Lithuania, Estonia fall, but you won't see them fall per se. And what I mean by that is Putin has no economic need to go into those countries. They're kind of duds the way they are. However, those countries might see an economic need to side with Russia. So they might voluntarily set up there. Now, we did hear about Russia saying that if Sweden or Finland joined NATO, that he would invade them. That is another scary possibility that we could be seeing here, which again is going to collapse markets. All right, well, let's just compare. I mean, you see the Ricky, powerful, blasting through. Personally, I don't really like how it's run. Just like I was talking about the stock market running 120% in 2 years with no downside. Okay, well, what'd the Ricky do? Ricky is up 140% in same time period. And I mean, it's got to correct or at least come back down and touch this line. It almost touched it here. That's why I have this line drawn, because I believe we're going to see some sort of correction and then continuation higher. All right, let's just show you the S&P compared to the Ricky. So this basically just shows the S&P divided by the market or the commodities index, and that's the Rogers Commodities Index. So when it's going up, that means that the S&P is outperforming the commodities. And when it's going down, it means that the commodities are outperforming the market. And as you can see here, that shift kind of happened about in November of 2020. So late, it was almost was last year, but now it's 2 years ago. Look at that. And again, look at this bearish momentum. Commodities are going to be in a bull market, huge bull market. Look at that bounce. I mean, if we just flip, can we flip this on here? I know we can flip this. I just don't know where I would flip this. Well, basically, if you flip this, this looks like a massive cup and handle bottoming pattern with a very strong upside. All right, now let's look at the S&P versus the gold miners. Now here's where it's really interesting. What's this back here in 2012? Okay, so this is when gold back here in 08 and 2012, gold was running hard, but nothing. It wasn't beating it. Then you see the 2012s happen, and the S&P way outperforms the gold miners. And the gold miners take charge. Then the S&P takes charge. Then the gold miners take charge. And that could be a massive double bottom right there, except for the fact that it's now looking like a triple top. And all that really means is that it just keeps hitting resistance up here, and the resistance is strong enough to reject it every time that it meets. So we should see the S&P compared to gold miners fall by another, what is that? I can't do that math in my head. What is this? 40%. A 40% downside in the S&P compared to gold miners, meaning gold miners are going to outperform the S&P by 40%. And frankly, I think that's accurate. If you look at, I mean, here, look at the indicators. The same shit we've been seeing. But in all honesty, just look at the macro environment, the money printing, the fact that the U.S. stocks are at like we're at a 32 average PE ratio. This is the S&P, so that includes Tesla. And Tesla, you know what? I'll show you how Tesla's eating it in the shorts right now. Look at this. Look at how ugly this is. Oh my God. So what we're seeing here, huge uptrend from, let's call it the beginning of time. Tesla's been pretty good for a while. But it really started getting hot here back in 2020. Really ran up here, set some resistance lines, some key resistance lines right here. And if you notice, we're breaking them. So the one trend line that we've been on this entire time we've been bouncing off of, we broke through. Now, it's kind of interesting, but the trend line correlates with the 52 in the way that it touches the weeks. And if you look, I'll throw it on the daily. You can see a little better on the daily with the horizontal support and resistance lines. I mean, look at that huge bullish candle. Trading-wise, I would call that bullish, but looking at this, I'm calling it bearish. So if you see here, we had strong support when it was above, then strong resistance when it was below, then it broke through, popped, bounced, broke. And when you combine all these trend lines, I know there's a ton of lines here. All I'm saying with this line here is that's the price target I think we're going down to. I think we're going to go down here and touch this previous resistance spot that we were at when it was bouncing on the line and then broke up. So I think we're going to come back down, retest this line at about 483. Yeah, yes, I'm calling for a nearly 50, not 50, what, 40, 35? What is that? Yeah, 40% correction. I'm looking for a 40% correction in Tesla. And I'll call that over the next, I don't know, give it till April. Looking for a fast crash. Reason being, I think we're already retesting the line here. I think we're already failing. Otherwise, maybe you could see something like that. Give it 6 months, and I think you'll be down here, down 40%. Everything is just looking ugly on this. Everything is looking ugly. All right, now to get into my portfolio, what I've been doing, where I've been going. All right, so in order to understand where I am, you have to understand where I've come from. I used to be in WeMe Hologram. It's been performing absolutely booty, but there's a reason for why I was in them. Not only the fact that they had a upside of 30 bucks, meaning that the potential upside here is 10x, but the fact that they have deals with, it appears, Apple to make VR AR augmented glasses, and those should be coming out in the next 2 to 3 years. They are producing LiDAR equipment, which Toyota is using, and that got approval by the FCC, and that's going to be used in cars coming up here by Toyota. So they have massive deals with Apple and Toyota. I don't know what company you want to invest in, but I want to invest in companies which invest in companies bigger than them and have massive revenue streams from that. So that's what was looking tasty to me, not to mention that it was a Chinese company, and I believe China is going to be taking over here in the next 10 years, and they will have the reserve currency, or one of the reserve currencies. I think we might see a divergence and see multiple currencies, maybe regional currencies, or maybe a global currency, reserve currency that has basically offshoot reserve currencies, like maybe one's backed by gold in one region, one's backed by oil in another region, one's whatever. Anyway, something maybe like that. Or we could just see what's been through history in just one reserve currency in general, of which I believe the Chinese will oust the U.S. and become the reserve currency. So as you can see, it's been in a bear market. I initially invested in this company right here. It was like 4 something. I invested right there. I was looking at this. I'm like, damn, look at that. Looks like a rounding bottom. We got the uptrend. We got the bear or the bull flag. We're bouncing on the EMA. We're gonna send it, and then it broke through, and it's been down ever since. Now, I was still holding this, and I wasn't really that deterred. I didn't really care too much. I was just gonna hold it and let it grow. But the issue became when war started. Now, so if you paid any attention to the Russian stock market, let's see if we can pull that up. The Russian stock market just ate it in the shorts when it came to the start of war. So they were actually eating it before, and then the war really just sent it down. But back to what I was saying about they retraced to the start of the market. Look at this. If you look, COVID crash runs up, and it gets a correction down below the point of COVID. The Russian stock market collapsed below the point of COVID. In fact, it collapsed below June 2017. I think we're going to see something very similar in the U.S., S&P, Dow, Russell. I didn't even pull up the Russell yet, but I think we're going to see something very similar in all of those. A massive correction to the downside that will be lower than the COVID lows. So that's why when I'm running through these, you're going to see them pretty much out of all U.S. equities. I mean, a lot of it's tech, a lot of it's hype, a lot of it is not taking into consideration the fact that people are not going to be spending as much money anymore. People are not going to be spending money because they don't have money, because everything is going to cost more, not to mention their wages aren't right. It's ugly. It's going to get ugly out here. Really ugly. that being said, let's pull up the RSI here. We will cancel you for now. And blam. Okay, let's pull up the RSI. Okay, so we're in oversold territories here. So again, whenever you see a massive crash like that, that's not sustainable. It's not going to go forever. And one of the scary things is whenever this happens, you generally see a massive rally again. This time I think it's going to be an inflationary rally. Anyways, we can see here, it's in the oversold territory. We should be getting some sort of correction, some sort of dead cat bounce, some sort of uptrend. I can't tell you if it's going to be the new trend like it was starting down COVID and just running straight up. I can't tell you we're going to have a move like that. I can't. But we might. So I'm sure you all heard that the Russian ruble collapsed its lowest ever compared to the dollar. Let's throw you on the month here. Its lowest ever. Wow. Its lowest ever. Well, that looks darn tootin' ugly, doesn't it? Really ugly. All right. However, once you set a new low, you can only go higher, right? I guess you could set another new low, but the odds are you'll go higher. Anyways, this doesn't look attractive to me at all. However, I think when you consider that the US dollar is going to be collapsing, that's when you'll see this turnaround. So I am going to be investing in companies that are in areas that produce commodities in commodity-rich countries, in countries that focus on their commodities, not on products like the U.S. focuses on products and streaming and subscription services. We don't actually produce anything. I mean, we do. That's an over-exaggeration, but compared to like China, we don't produce. Okay, so let's look at PBR. This is one of the stocks that's in my chart, not my chart. It's in my portfolio right now. I'm super bullish on it. And we're going to get rid of you too. So this is a chart. They started trading back in 2000. And you can see here, this was the oil boom into 08 and then the crash. Okay, so you see here, it went from $5 all the way to 78 bucks. Let's do some quick math on that. That was a 15x. So we're talking about a 15x from bottom to top. Now where are we down here? $5 again. Okay, so we could very easily see this another $77 price target on the stock. If you look here, it's double bottom, was in a massive downtrend. It's now crossing over the moving averages on the long-term time frame. And as you can see here, there's some resistance in this area, going back here down to where it touched here. Kind of had some resistance, broke back up, got rejected, came back here, tried to touch it, got rejected by the EMA, broke above the EMA, had strong resistance, again, could not close above it, got rejected, came back over, tried to break above it, couldn't get too high above it because it was hitting another resistance level. And that one, I should put that on the chart because we'll probably hit it and get some resistance as well this time around. Right there, had some resistance about right there. And if you look, that plays in with the closes over here, the tops there, over there too. So that's a strong resistance level. I believe though within the next month you're going to see uptick, maybe some finagling in here before we really continue higher. But if you look, we didn't even come back on this crash as we did back here. So I'm super bullish on this, on all the indicators. Let's throw the MACD back up. The MACD is turning positive. Look at how beautiful that is. Oh boy, oh boy, oh boy. And if you look at it in comparison, the lows to the lows, we're getting higher lows. That's what you want to see, higher low, higher low. Honestly, I think this thing is just primed for an explosion. I am ready to ride it. Let me tell you that. And look at that. On the monthly, the bullish momentum is increasing with a now turnaround on the overall momentum. So we're going to see some strong moves here on PBR, which is a Brazilian oil company. They own ports. I'll show you the Brazilian dollar here in a second. The Brazilian dollar is kind of eating in the shorts as well. But again, it's the same idea with the Russia play. Once you're at the bottom, you only have one way to go, and that's up. Go up or sideways, I guess. But again, here we got, look at this. Look at this. We have the start of, okay, well, that's actually really interesting. Look at the resistance line down here. If we plop that right there, the MACD has not gone above 1.16 effectively since January of 2010. So for over a decade, it has not broken the 1.16 range. Now, what happened the last time it did that? The last time it did that was already in a bull run. All right, so that's what, again, that's what I think we're going to see, and we have to compare this to oil now. So before I jump to the Brazilian, let's go check out oil, see what oil's doing, what's been doing, and where we think it's going. So massive resistance lines there. However, if you go and you draw the pattern out, you will see that we indeed, we'll just call it that, we're in a falling wedge. We broke above, we broke the resistance here. We're above the moving average. We got bullish momentum down here. We got bullish momentum over here. Man, it's just looking sexy. And then let's take a price target on it, right? Let's go from the highest point, bring it down, and then let's put it at the breakout point. And where are we headed? We are headed to you get your ass out of here. We headed to 163 on oil. Can't tell you when, but that's where we're headed. It'll take some time. One thing I don't really like about the oil chart per se at this moment is it's pretty volatile. And we're having the same kind of pattern that was happening on Ethereum and the Dow going up. So what we might see is we might see it come up, have a little correction here. Where would a nice place to correct be? Right there would actually be a beautiful place to correct. Come back here, touch on the previous resistance right about 78. So you might see a little pullback to 78 before a continuation higher. And that would be perfect, honestly, because it would set a higher low. That would actually line up perfectly with the moving average, and then you would see a higher move. So I think that's what we look for on oil. And if that happens on oil, you might see slight downtrend in PBR, Petro Brasilia, just as that moves. However, if we're looking, I mean, these companies are kind of based off of their average income, right? So if we have an average income above here, which is above here, then we're going to see a movement higher. It's just, it has to happen. So then we have to consider their dividend yield. Now, I mean, you tell me what you want for a dividend yield. Do you want quarterly dividend? Yeah, literally, they're paying you quarterly $half a buck per share, and it only costs 15. So, I mean, insane. A 15% dividend yield with a PE ratio of 3.5. 3.5. Okay, now let's show you the Brazilian. Let's go to Forex. Right there, boom. Oh, whoa! I didn't actually realize that. I thought it was going down. Or is this the U.S. dollar? Okay, so the U.S. dollar has been gaining. Okay, so what we're seeing here is strength in the U.S. dollar. We saw a cup, saw a handle, which also happened to be a cup, another handle on this mini cup. Boom, broke higher. So honestly, we should be seeing a, what is that? What is it? 4, 2, 1.5. Honestly, we might have hit it. Okay, we were just shy of hitting it. That's why I love technicals. It's not perfect, but you come really close to your patterns, to your targets. Okay, so what we're seeing here, honestly, this looked like a consolidation pattern. It looked like it was going to break above, but what we're seeing right now is it looks like it might be breaking below. And you see that again here, the momentum's turning negative. I think we're going to see more downside in the dollar, again, based off of those inflation factors and based off of the same. I mean, the sanctions that we imposed on Russia were for the Donetsk region, or however you pronounce it, the region that was being invaded in Ukraine. We didn't put any sanctions on Russia. We put them on Ukraine. I'm not going to swear. All right. So personally, I think we're going to see a downside here. Again, breaking below the moving average. I think we're going to see the Brazilian real bolster. We're going to see more income or more value compared to the U.S. dollar, which is going to make companies like Petro Brasilia. It's going to raise their dividend in U.S. dollar terms, and it's going to make their company overall more valuable. All right, let's head to Goldfields. Love Goldfields. Now I'm doing a technical analysis right now. I could do a fundamental analysis later. I don't really have the time for that today. Again, look down here. Look down here on these indicators. It's turning bullish, and it's getting stronger. It's going with the momentum. The momentum is in the bullish favor. I mean, okay, here. Look at how beautiful this is. Look at how absolutely beautiful this is. So we had a massive cup handle, and the handle is being broken. That was your resistance line. We just broke it 3 weeks ago. 2 weeks last week. 2 weeks ago. 2 weeks ago we broke it. And now we're already testing the previous high of 13 bucks, but it's not just a previous high, it's a previous massive resistance level here. Resistance around 13.14 back in 2011. Resistance all throughout the early 2000s. Resistance way back here in the mid 90s. And it was support, throughout the early 80s. Okay. So what I'm saying here is if you look at, we haven't even looked at gold. Now we got to go look at gold. Okay. You want to know where this stock is going? You want to know where Goldfield is going? Well, you got to know where gold is going. Gold from 2000 is at 300 bucks. Literally did, I don't know what percent is that. Did it 7x, 8x. Look at that. How beautiful. Okay, now we got another massive cup and handle. You want to know where gold's going? Go from the top of the cup to the bottom of the cup and put it at the breakout point of which we are at currently. And you're looking at 2,700. You're looking at $2,700 gold. Super strong bullish momentum. Look at the last time this happened. Last time that the bullish broke the bearish and had overall momentum go with it was right back here in February of 19. That was right before COVID, a year before COVID, and then we just went ballistic into COVID. Cooled off back in, everything seems to be cooling off back in August of 2000. August, September, that area. Cooled off. Sorry about all these lines. It's just more technical when I'm looking at it on a daily. We're going to get rid of this so we don't need the fibs. Get out of here, you dirty fib. Okay. I mean, this wick was insane. That happened the day that that Russia invaded Ukraine. You saw a massive spike, and it just got hammered down. It doesn't make any sense. I'm expecting to see this. Is gold already open? We're open already. We're already on the week open. Look at that. Okay. Awesome. All right. Basically, look at this consolidation pattern. Broke out. Been trying to break out. Finally did it. Now we're above it, and we're just breaking all these resistance levels. I think we're going to see 2,000 gold by the end of, definitely by the end of April, in my opinion. But I'm not going to give exact dates. I'm pulling those numbers out of my ass because they don't mean anything. It's just what I personally think is going to happen based on the momentum. So that's how that looks. And that's how we know the PBR, in my opinion, is going to break this significant resistance level over the long term. And then we should see, don't mind that it's all crooked, that doesn't really matter. We're just looking at the height. We should see it back at 22. So we should see roughly a double in this stock based off of its technicals and based off of where gold's going. So I'm looking for a double in GFI, and frankly, I'm looking for a, what is that, 30, so I'm looking for a 5x in PBR. I'm looking for a double in Goldfields. Let's go to VALE. This is the largest iron ore and nickel producer in the world. They're located in Brazil. Again, same concept applies to the monetary. And honestly, let's look at nickel. I mean, iron ore. Let's see if we have iron ore. Okay, so to understand where it's going, we have to understand where the underlying assets are going. So, boom, here's iron ore. Iron ore, not looking perfect. It kind of bubbled and crashed. That's fine. because we're making it back. So if you notice, we set a higher low actually. Got resistance here. We are currently right at the EMA. So this one's a little more speculative. I can't really tell you exactly where it's going. You know, iron is awesome, really booms when there's a lot of good economic activity when we're building. But if you think back to World War II and what happened during World War II, we obviously we cut our entire economy and turned it, as in the U.S. did, and turned it into a military production economy. Okay, well, what do the military use a lot of? They use a lot of iron. They build a lot of tanks. They build a lot of planes. They build a lot of weapons. There's just a lot of steel that is used in military. In military use, there's a lot of metal in general. So if you think we're headed towards good times, if you think we're headed towards war, iron could be a play. They actually got rid of copper pennies back in, I think it was 45. It was like 44 or 45. They got rid of copper pennies. I might be wrong on those years, but it was World War II era. They got rid of copper pennies because copper, I believe, it wasn't based off of the value. It was based off of the need and where it needed to go. It wasn't into the money. So we actually have steel pennies. Let's see if I can pull up a steel penny. Yep, right here. 1943. I was off by a year or two. Look at this. We had actual steel pennies. This is not a washed out. This is not a plated. This is a legitimate steel penny. Right there. Look at this. Wartime steel cents. So that shows you copper became too valuable to put into currencies, and they wanted to put steel into. Okay, you need to get down here so I can go back. Come on, what are you doing here? I can't. There we go. Okay. So sorry about that. So again, I think based off the iron price, and you can see the iron price. This is the iron price. I'm sorry. Let's go to VALE. You can see the iron price in VALE. Boom, boom. And we're back to the correction. Okay. Now let's look at VALE based off of technical support and resistance lines. So we have here, I should put boom. Okay. You see resistance, support, support, resistance, resistance, support-ish, resistance-ish, boom, support-ish. This whole range, it's kind of a box. I mean, we have like precise levels, and then we have ranges. So that's what we're seeing there. And if you look at it, we're in an uptrend. We have a higher low, higher low, higher low, higher high, higher high, higher high. We're just in a technical uptrend. So, bullish. Bullish. Now the reason I'm cutting this low out, this is COVID probably. Yeah, that's COVID. Okay, that's a COVID low that overshot the low, had resistance, so it still actually validates the line. Even though it's not inside of the channel, it still validates the line by being resistance, which then turned into support. The EMA ended up being support, but became support back here again. So even though we had this nasty correction right here, it's above, it's on the EMA, it's bouncing. I believe we're going to see a higher movement, maybe movement up towards, I can't see that, what is that, up towards 26. So we could see, what's 17, sometimes I can just whip out percents, and sometimes it's, the numbers are still awkward, 50%. Okay. So we're looking for a 50% increase in VALE in a short period of time. And then if you kind of, it's a very similar chart to PBR, if you look at it. Very similar chart. PBR is just a little more volatile, it looks like, and it's lagging a little bit in comparison to VALE. Now, keep in mind, they're trading different assets. But one of the things I like about this is they're both Brazilian companies. So VALE has an all-time high of 43 bucks. Right now, we're at 17. I think we're going back there. So we're looking for a 3x minimum. Again, they produce a lot of nickel. They also produce copper. One of the things I really love about VALE is that their president has said that he is going to be in support of all mining efforts. Brazil, they don't really seem to care about their environment whatsoever, even though they have the lungs of the planet. They just don't seem to care. They want money. They will cut down the entire rainforest, throw some cattle on there for 5 years, and then move along and leave the whole thing to be a barren wasteland. So they literally use mercury in the Amazon River, and they don't wear gloves or any protective equipment, and they just play with mercury to mine gold out of the Amazon River. So it is a mess down there. I love it. I love it, because one of the things I hate about the U.S., we have a a huge copper deposit. I'm in Minnesota. Up in northern Minnesota here, it's in the Polymet mine. And the people, everyone, Minnesota is very liberal. So you got a lot of people who are like, "Ooh, we want clean energy. We want green energy." Okay. Well, they also want to protect the Superior watershed. I do too. I really value that lake. I was up in Duluth for 3 years. Love it up there. It's absolutely beautiful. And the lake has a spirit. I do believe the lake has some sort of energy connected to it, or maybe it's just looking at the largest freshwater lake. There's something about the lake. There's something about the lake. I want to protect that as well. I do value it. However, I also value money and I value an economy. So the upper northern region used to be a huge iron ore mine area, and it's been getting shut down, turning into ghost towns as the mining restrictions get worse and as money doesn't flow into it. So I would like to see that come back. I would like to see that mine, which I believe it was something like $300 million injected into our, it was either 300 million or 300 billion, don't know for sure, probably million, was going to be injected each year from that copper mine. So I would like to see that happen, but there's environmental restrictions. Now, again, I'm in favor of protecting the environment. I think we should take that waste and get it the heck out of here. I don't want it in the Superior watershed either, but that doesn't mean I don't want the mine. So I think we need to find a compromise and get the waste out of here. Anyways, what I'm getting at here is that mine's been locked up and we can't get into that copper. We can't get into that clean energy source. We can't get into the if you want anything techie, you need copper. And we're not able to touch that due to regulations. Brazil is saying, screw the regulations, there are none, go have fun. And so that's why I am bullish on Brazil. That's why I like their president. Their president seems to be a right-wing guy, and I love right-wing guys because they're smarter than left-wing guys. Prove me wrong. So if we look at this, again, key support or key resistance levels here, bang, 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 breaking above. VALE, I think we're going to see a lot higher. Here's WEME, here's where I was, no more. Okay, so I'm in Harmony right now. I used to be in Metalla Royalty and Streaming. Loved that company. It used to be in Equinox. That one looked tasty. Reason why I left them was very simple political risk. My entire portfolio here is based off of politics and commodities, which is based off of monetary policy, which is based off of politics. So my entire portfolio is based off of where I think we're going based off of political decisions and politics in general, the geopolitics, just politic. I think if you're not paying attention to politics, you're not paying attention. All right, so this is a long stream. Wow, okay. I used to be in Metalla and Equinox, like I said, left them because in Canada, they just they executed emergency powers and then shut off people from their bank accounts. What? That is insane. That is communist. That is insane. To be able to confiscate someone's privately held, I mean, I guess they're not privately held because the bank was holding them, assets, and freeze you from your account, all because you gave some truckers some money. That's insane. That is insane. So I can't be in that jurisdiction anymore. I refuse. So I moved all my money out of those two companies, regardless of how good they looked, and I put them in South Africa. Now you might be like, you put them in South Africa and you thought that was safer than Canada? Yes, I did. Reason being, I've been to South Africa. I know what South Africa is about. It's pretty sketchy. Don't get me wrong. Do not get me wrong. But they're a commodity country. They're one of the only two, not only, but one of the very few, one of like 3 producers of platinum in the world. They produce diamonds. They produce gold. They produce coal, I believe, as well. They're not gonna hate on the commodity sector over there. They're a strong commodity country. That's how they get their money. You think they're gonna shut them down? No. Now, Harmony Gold is the largest gold miner within South Africa, and they're expanding. They've had increased revenue over the past 3 years. They're just looking really good. Now, if we go over here, all-time high of $18. We're currently at 4. Okay, you tell me. What is it? It's like a 4.5x that we're looking at here. And again, same pattern. If you notice, I invest in companies that have this exact same pattern. It's a double bottom where it goes low. The first low is lower than the second low, and it's slowly inching its way up, has a massive break of resistance, or a break of resistance, or it looks like it's going to break resistance, and then it consolidates, and then it's going to go again. So right here, we are just crossing, apparently, because it's green, even though it looks negative. Okay, we might add okay, we are negative. We are negative on these, but it's turning positive. Could break through. Same thing here with the bullish momentum, potentially getting more support here. We can't really tell yet, but let me but again, it's a gold company, so just compare it to the gold price. Excuse me, and you know where it's going. So let's pull the trend out here. If you do it from the wicks, we just kind of broke out, came back in. If you do it from the bodies, we're breaking out. So if you want to look at it, we're very close to a breakout, if not breaking out. So again, oh, look at this EMA. Look at that EMA. Look at how tasty that is. And blam, we're right at it. We are right at it. Okay, so I would expect this week to see a massive breakout here on Harmony and strong percentage gains. And again, if you compare Harmony, and I've been doing that, I'm not going to, it'll be hard, but if you focus on Harmony and you compare it to Canadian stocks, or just non-Canadian mining stocks to Canadian mining stocks, the Canadian mining stocks are actually not gaining as much as the non-Canadian mining stocks, and they're losing more when they lose. So to me, that signals that other people are thinking the way that I'm thinking, that other people are trying to de-political risk their portfolio. It shows that I just want to stay away from that. Now, this one might surprise you, the next one we're headed to, because you're saying I want less political risk. Well, I just moved all my WeMe shares into Gazprom and turned that into Gazprom. And so you might be like, wait, I thought this guy didn't want political risk. I like Russia. I like Brazil. There's an index called BRIC. It's Brazil, Russia, Indonesia, and something else. I would consider investing in that, but I would need to look in it more, do more research all the companies in it. And frankly, I don't have time for that. And that's one of the reasons why I don't invest in indexes, is because I want to know what I'm investing in, and I can't possibly explain to you why I'm invested in 50 different companies. There's not enough time, and there's not enough reasons to say this company that is clearly worse than this company is the same reason why I'm investing in them. So that's why I don't invest in indexes, because there's too many variables, there's too much. And you could say, well, indexes are diversified, they tend to outperform stock pickers, and I would agree with you there based off of statistics that we can kind of see that. But my goal here is I'm going to look at what is in the indexes, look at what I think are the best within those indexes, and then I'm going to incorporate those into my portfolio so that we have the strongest of all the indexes in my portfolio. That's kind of my trend. Now, Goldfields, I stole that one from Peter Schiff. I stole Equinox from Peter Schiff. Metalla, I don't believe. It might be in GDXJ. I don't know for sure on that one. PBR and VALE, I'm pretty sure are in the BRIC in the BRIC ETF. Harmony, couldn't tell you, but I actually don't even remember how I found Harmony like 2 or 3 days ago. I've just been looking for South African miners. Anyways, Gazprom. Okay, so Gazprom, based off of natural gas, if you look at it, it was actually performing very well. It was rounding the bottom, it was breaking resistance, it was bouncing off resistance, and then Russia went to war, and it collapsed, utterly collapsed. And I said, thank you for putting it on sale, and I bought as much as I could. So if we look here, we are on the weekly. We got a price range up here of 31, and we're currently at 5. So we got a 6x is what we're looking to get. Bearish momentum is increasing down here. So you might be like, why are you investing if that goes against everything that you were just showing me? It's for the simple fact that I think these numbers are just juiced based off of the crash, and I think this is an oversold. Let's see if it's oversold. I believe it's oversold on the. Okay, so one of the things you have to think about fundamentals on Gazprom. The Nord Stream 2 pipeline got canceled by Germany. Okay, well, was it open? No, it wasn't open. So they lost nothing. They had zero profits to lose, so they lost nothing by that getting shut down. Now, their other pipeline, or the one that goes apparently through Ukraine, through Poland, into Germany, that one's been increasing output by 4-fold, with an increase in European gas prices of 30 to 50%. So you're telling me we're having a 4x volume with a 30 to 50% monetary increase. That is going to be huge. That is going to be absolutely huge for the next quarterly earnings. And you're telling me over here that it's lower in value for what? The sanctions that Biden put on didn't even affect the energy industry. You think Germany, you think Europe is not going to have any gas? You think they're going to freeze for fun? No. No. And if you think there's going to be any political sanctions on if Russia can be in SWIFT, do it. Take Russia out of SWIFT. I dare you. Because what's going to happen? What's going to happen is they're going to start trading with companies outside of the SWIFT, or countries outside of the SWIFT system, i.e. China, basically their ally right now, of which they're building a pipeline to. Gazprom themselves are. They're building a pipeline over to China to supply China with natural gas, and they're going to just start trading with countries in gold. You're going to see a shift away from dollar trading, which China and Russia don't trade in dollars anymore. They trade in their respective currencies, and you're going to see it happening where people trade in gold or their own native currencies. So I think this is just massively bullish. All of this Ukrainian BS is massively bullish for Russia. So now not only is Russia going to incorporate Ukraine into Russia, but now Gazprom will be able to access gas and oil fields within Ukraine. Burisma, of which John Kerry's kid, of which Nancy Pelosi's kid, of which the crackhead Joe Biden's kid was all working it. That's now going to be part of maybe Gazprom. I can't say that for sure. It might still be Burisma. I don't know. But Putin's going in there to de-corrupt Ukraine, and then he's going to corrupt it with his own people. It's the nature of the event. Anyways, that's what we're going to see here. So we're going to see potentially all these oil fields get converted into Russian oil fields, of which Gazprom will benefit from. So they have no negative losses. They didn't lose anything. They don't have any negative profits. They have positive profits, and yet the stock went down. That's a buy. That's a fat buy. I was looking to buy it up here, but I was kind of iffy. I was looking at it when it was at $10. I was like, I want to buy it, but anything that runs, again, look at this. Anything that runs 180% from November 20 to October 21st. So in like what? Is that 11 months? It ran 180% in 11 months? No, it's unsustainable. So we're waiting for a pullback. We got the pullback, and then we got a collapse. I bought in 6 cents above where we are currently at 536. So let's hope it goes higher. All right, then let's look at the overall technical chart. Again, massive cup and handle pattern seems to be forming, and it was bouncing on the support until the invasion. Okay, now let's go and look at the natural gas price and see what's happening there. I believe this is either the U.S. or the overall, so it doesn't take into account specifically Europe. Although, like I said, let me prove it to you. Gas prices surge in Europe. Okay, they're hitting record highs. You see down there. Business owners terrified for the future. There's some fear porn. It was 5% higher. Okay, it was like a 1 day. It was like instantly spiking 5%. Here we go. Wednesday also saw Germany day ahead baseload power prices gain more than 50%. Right there. The energy prices were more than 50%. French were more than 17%. European benchmark gas prices surged 30% on Tuesday. So you're seeing massive price swings in, if this will go away, I can bring it back. There we go. Massive price swings in the price of natural gas, which will be extremely beneficial for Gazprom, which, like I said, increased their sales or increased the volume that they're pumping to Europe currently by a factor of 4. So if we look here, the gas price is kind of bouncing on this whole huge, wow, that's a long-term support resistance line at about $4. Look at that. That is just beautiful. Look at here. It was resistance, then it was resistance, support, resistance, resistance, support. Call it support, resistance, just confluence. A huge channel right here between 350 and 460. So there's just a massive price range in there, of which we're breaking above. And when you break through where you've been, you go higher. Where can we expect gas prices to go? Okay, let's not get too greedy on this. Let's say $10 for some gas. So if you see gas prices double, then what do you think Gazprom is going to do? You think Gazprom is going to just double? And keep in mind, double from $7 or $8? You think it's going to go just 16? No, it's going to go much higher than just 16. But now we're starting down here at 5. It went down and touched 4. It touched 4. That is incredible. I wish I would have bought it back at 4, you know, shit. but I'm not perfect. I'm pretty good, I believe, but I'm not perfect. All right, now let's look at some silver. If you don't hold silver, you should. This thing's just money. Literally and figuratively. Look at this. Look at this. So it's below the EMA after it was above the EMA. Again, it's gonna trade like gold, just on a rocket ship. I think we're gonna see. Look at this momentum increasing, RSI increasing. Give me that DMI. I want that. I have the DMI. I want that MACD. Give me that MACD. Give me that MACD. And blam! Boom! Look at that. We got increased momentum coming on. Looks like we're gonna cross. If you can tell, all my charts look roughly the same. After a massive downtrend, you got a massive consolidation with upward movement. That's kind of the portfolio there, guys. We hold real commodities and we invest in commodity stocks, and we're trying to de-risk our political risk. We're trying to get out of the U.S. markets because we see the U.S. markets is going down. If we go to war with China, get ready. Energy's going ballistic. Commodities are going ballistic. Markets are going down. So that's kind of that. Thank you for hanging with me and watching and learning. This is gonna be fun. All right, let's try to see if I can get back to this. Okay. How do I stop my recording? See you guys. Thanks.